And let me jump into part 2, which is advanced risk management. I want to talk about the concept of risk on versus risk off and how to manage your portfolio during the bull and bear markets. First, I want to talk about a few concepts before we get into the slides. The way I look at assets is that I try to break them down into 4 categories. And again, this is something you might have never heard before, but it's the way that I look at portfolios and I look at risk metrics. And again, I'm not a financial advisor. Nothing on this video is financial advice, but this is how I look and try to qualify and quantify a portfolio that can be very daunting. It can get a little bit out of control if you've got 10 coins or 20 coins or 30 coins. And again, I'll talk about what I teach my students later. And so I break all of my crypto assets down into one of 4 categories. The first is what I call blue chip coins, which I really categorize Bitcoin and Ethereum into what I call those blue chip coins. Secondly, I put my portfolio into things called stable coins, which are pegged to the US dollar. These are things like USDC and USDT. This is the second type of asset class. The third asset class is something I call altcoins. These are coins like Cardano, Solana, Polkadot, some of the layer 1 solutions, say in the top 25 market caps. This is what I call an altcoin. And then finally, I have the fourth asset class, which is what I call the next 100x coins. These are coins we're really looking to go 100x returns. Of course, we don't know if they are. And of course, we can never guarantee they are. But if it has that type of risk reward scenario, we call it a next 100x coin. And those are my 4 types of assets that I try to qualify every portfolio as. And again, it's a way of understanding risk management. So stay with me here because this is a way I teach my students how to understand their risk portfolio. Let me start by showing you a typical portfolio of cryptocurrencies. And again, I'm putting it up on screen here. And this is the exact portfolio of a YouTube influencer out there. And again, a lot of them publish their portfolios, and strangely enough, they're all not that dissimilar looking. And you can see here lots of coins like USDC and DOT and Ethereum and Bitcoin and Solana, etc. And quite honestly, it's quite complicated to really understand what's going on here because there are so many little tiny individual coins. It's very, very hard to do. So take a look at all those graphs and all those colors, and then come back to me here quickly. Now, as opposed to looking at that multicolored graph, what if I took each one of those coins and put them into one of 4 buckets? Blue chips, which is either Bitcoin or Ethereum. Stable coins, anything pegged to the US dollar. The third, what I call altcoins, everything something maybe in the top 25 to 50 top market caps, things, $1 billion plus. And then finally, what I call next 100x coins. Those coins with a lot of risk, but potential reward. If we take that same portfolio and break it into those 4 parts, it looks like this. And I'm putting this on screen right now. And those of you that can't see the graph, I'll just explain to you. About half of it is now blue. Those are our blue chip coins, which means they are more stable than the rest. Then we go to more than a quarter are pretty much altcoins, about 27%. Then we see about 8.5% in stable coins. And finally, we see about 15% in what I call the next 100x coins. Now that graph gives me an idea of my risk profile, and this is a really, really important point to think about. We see about half in blue chips, Bitcoin and Ethereums, which we expect over, say, the next 5 years or so to have about a 10x return. And you can come back to me here. Those coins, people on my show, very few people come on my show and say, Brian, Bitcoin's going up 100x. Very few people believe that. They believe that Bitcoin, Ethereum over the next 5 to 10 years will experience a 10x, maybe a 15x return. Great. We all know now that that portfolio has about half of the coins in that. Next, we've got about 8.5% in stable coins. Those things are going to peg the US dollar. Not much risk there except protocol risk and technology risk, which is real, but still, it's not going to move around relative to the US dollar. Then we have those altcoins. Again, they are the highest value coins, the top big ones in the market cap tables. We know we got about a 27% of that. And then we know we've got 15% of our portfolio in those more risky assets that give us a higher reward. And that's a great way to look at any portfolio. But let me ask you a question. What if you say, Brian, I really think the market's going to go up and I want to position my portfolio so I get the most out of it. I want to take some more risk, Brian. I feel comfortable because I really think this is all going to the moon next year in 2022. And I'd say, okay, look, you're an adult. You can make those choices. And if you want to make those choices, your portfolio might look something like this. And I'll put this graph on the screen. And if you're not with us here, I'll explain to you what it looks like. Here, we've dropped the blue chip coins, the Bitcoin and Ethereum, now down to only a third of our portfolio, right? So the least risky coins now have a smaller piece of our portfolio. And what did I do? I jacked the altcoins up to 40%. So that means I've got 40% maybe in some of those layer one solutions like AVAX, maybe in Solana, maybe Polygon. Maybe even I've got a gaming company and they're like Axie Infinity that's in the top 50 market caps because I'm really comfortable with that risk. And guess what? I'm also comfortable with the Next 100X coins. I put 25% of my portfolio in these real Next 100X coins, sometimes less than 100 in the top market caps. Some of these up-and-comer companies, maybe something like a Helium or a Sandbox or something like a Loopring, something in there that's going to have a lot more risk, but potentially a lot more reward. And guess what? I'm comfortable with that because I'm positioning my portfolio for the bull market. So that's what that might look like. On that same scenario, what if I'm unsure about what's going to happen next year? I've seen the recent pullback in Bitcoin. Maybe I got a little burned and I'm thinking, you know what? I love this space. I think DeFi is going to change the world, but I'm a little cautious next year. Guess what? I've got a portfolio for you. I call it the unsure market scenario portfolio. And I'll put this up on screen. You can see now I've put 60% of my portfolio here into the blue chips. That means Bitcoin and Ethereum, the majority of my portfolio. Because again, I believe in the market, but I don't want to take as much market risk when it comes to the crypto asset space. I've dialed up my stablecoin portfolio to 20%. I'm holding 20% of my position in cash. That way, maybe I can buy some dips. Maybe I can be ready because I'm just unsure what's going to happen. You can see I've dialed down my altcoin exposure all the way down to 15%. And the big thing to see here is my Next 100X coins, those highly risky coins, only 5% of my portfolio. Very tiny. I don't feel comfortable in this scenario having a lot in these companies that haven't really shown traction, haven't really shown customers. Right now, it's a lot of belief in the future. And that's my unsure market scenario. Lastly, I want to show you what I call my bear market scenario. Now, before I put the graph up, this is if we really think the markets are going to come down in the future and we're really preparing for a market sell-off or a correction, which is going to happen at some point in the future. This on screen is my bear market scenario. This is if you really think markets are going to correct by 50 to 70%, which by the way, they will sometime in the next 18 to 24 months. They will. Welcome to crypto assets. Look at what I'm doing here. 80% in stable coins. Look at that. All pegged to the dollar, ready to buy those dips. I've still got 13% in the blue chips because I still want to have some Bitcoin and Ethereum in case I'm wrong. And again, I've dialed down my altcoin exposure to 5%. And my Next 100X coins, 2%. And I'm waiting with that cash to buy those lows. I'm waiting for the market to come off 50%, 60%, 70%. And that's when I'm going to go in and buy my blue chips. That's when I'm going to go in and buy my altcoins. That's when I'm going to maybe go in and buy my Next 100X coins. And again, I tell my students to get prepared and get used to all of these different portfolio scenarios. Because most people, they're hodlers. All they know how to do is own crypto assets, and you're going to get burned. And the next bear market is going to come. Again, anybody who's been in this space long enough knows these things are cyclical and they're going to happen. So understand what these portfolios look like and get comfortable holding stable coins in your portfolio. It doesn't mean you can never buy crypto assets again. It just means temporarily you're going to be protected from market sell-offs. And this is just intelligent risk management.